We know 2 weeks ago, Fisker warned that they were running out of cash and they were in talks with a car maker for investment.
Their overall average, I think, is skewed by you have your really, really strong bears and you still have your really strong bulls. Street high price target is still 320s.
The original story that I think most investors bought into with Tesla didn't really include Elon and Twitter.
If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone.
All that and more. So let's get to it. Tesla stock is up in the pre-market nearly 1%, sitting at 163.85. For the week, down almost 7%. Year to date, down 34.5%. How low can Tesla go?
Fisker is in a tight spot, and I don't think this is a big surprise, but bankruptcy word getting thrown around now.
Well, I suppose Tesla won't go that low.
Yeah, not a big surprise. Big reaction. Certainly, we're seeing them down almost 50% this morning. But the company's reporting they've hired a restructuring advisor to assist with a possible bankruptcy. We know 2 weeks ago, Fisker warned that they were running out of cash and they were in talks with a car maker for investment. We know last month they said they had about $273 million in sales for the year. That's on about $1 billion in debt. They were also trying to negotiate to raise some cash from investors. We've seen them miss targets in terms of deliveries and production. The company cut their forecast on demand twice last year. They talked about the competition that's out there. They said the direct-to-consumer complexity has been a real trouble for them. But, honestly, if this isn't the first time we've seen this. Fisker Automotive filed for bankruptcy in 2013. We know that we've seen issues in a lot of their reports. It's not a big surprise, and we know that this EV market has become more competitive at a time where people are trying to cut prices, but also costs have been high, and it hasn't necessarily been the best market for EVs over the last couple of quarters.
Fisker won't be the first to file for bankruptcy, and they damn sure won't be the last. It just goes to show you that this ain't as easy as Tesla makes it look.
Tesla, I feel like, limited options. There's not a lot of room for interpretation for this chart. I don't think we'll see. What are the commentaries now skewing towards? Positive or negative, Jenny?
So they're very negative. I will say we also discussed that note out of Wells yesterday pretty heavily that was downgrade of shares to sell, which is, I respect the conviction at least.
Totally.
To me, if you're low 125 price target down from 200 and you keep a neutral rating, I'd say you're not fully committed to the bearish stance. But we're only seeing that pile on today. UBS lowering its price target to 165 from 225 with a neutral rating.
When it rains, it pours. It would appear everybody and their mother is chasing Tesla stock, updating their fair value estimates in order to keep themselves somewhere around where the stock is, instead of discounting the enterprise value in the future back to now, unless all of these firms assume that in the year of 2034, Tesla's going to sell at about the same level of vehicles. I'm not sure how they get these price targets. They all feel like arbitrary numbers in accordance with where the stock is at today.
Exactly what bugs me is like, do you see this right now continuing to get lower, but you also say hold on to things?
Well, they're only 165, right? It's at 166 now, so it's kind of a true neutral.
So they think we'll stay right here for the next 12 months?
That's a big slash to their price target, though.
It is, and it's below the average right now, which is around $200 a share. But this follows the overall their first quarter delivery forecast being reduced to 432,000 from 466,000. They did note that this is now about 10% below consensus, which is around 477,000 units. They also do say that overall their 2024 delivery forecast is around 1.96 million. That's also down from over 2 million and about 5% below the street. So they're basically coming in below what the street's expecting. I think that you're naturally going to see, though, some, like their overall average, I think, is skewed by you have your really, really strong bears and you still have your really strong bulls. Street high price target is still 320. So there's such a skew in either direction. And
really?
I will say, yeah.
How backwards is the analyst community right now? They're short on Netflix. They're an implied short on Netflix by their average price target. The stock's doing fine.
Right.
And then they're super bullish on average for Tesla. Stock's getting wrecked.
That's the street high. The average is like $200.
Okay, all right. Well, still, though.
It does imply up, yeah. But not 320 upside.
Okay, so not quite as backwards, but they are still kind of backwards. they're implicit long the downtrending stock in Tesla, and implicit short the strong chart in Netflix.
I will say though, it's getting a little bit more compelling as it gets lower because that valuation needs to come down. It's still so overvalued. I mean, it trades at a multiple that is higher than the rest of the Mag 7 average. That makes no sense.
Right, okay.
Well, analysts continue to be baffled at Tesla's chart and where it tends to be going here in the present. I have no problem buying Tesla shares at this level, maintaining my conviction as I have my enterprise value for Tesla at 2034 and discounting it back to 2024. I don't want to take anything away from Netflix, but I'm pretty sure they're not planning on innovating multiple industries, displacing the automotive and energy sectors, not to mention robotics and AI. Now I get it. Netflix did a number on Blockbuster. As a former Blockbuster employee, I can appreciate the value of disruption. But as I don't do my research in Netflix, it's hard for me to see the disruption potential in the future. Whereas with Tesla, they're in the early stages of disrupting everything that they touch.
Well, Tesla share is falling more than 30% since the start of the year, with a number of factors leading to that decline. The EV giant has received several analyst downgrades, including one from Wells Fargo on Wednesday. There's also concerns about a slowdown in EV demand. Let's talk about where investor sentiment is likely to lead to now. Ross Gerber, Kawasaki Wealth and Investment Management CEO, joining us now. Ross, we always like to talk Tesla with you, but I wonder where you think about where Tesla has fallen right now. Is this just about Tesla coming back down to reality where fair value should be? Or are there fundamental questions about its growth potential now?
Well, unfortunately, I think it's kind of both.
This should be good.
The original story that I think most investors bought into with Tesla didn't really include Elon and Twitter. And I think for a long time, we all hoped that it really wouldn't affect Tesla and the demand for its products. But we all know that that has now happened, and the demand for Tesla products is obviously lower.
Just the best-selling vehicle in 2023. A stymied growth couldn't possibly be because the cars are expensive in this macroeconomic environment. Coupled with the perceived lifestyle change that is required, you can't expect to reach China-level EV penetration without a high-quality battery electric vehicle in the $20,000 to $30,000 range, which Tesla doesn't provide. And the US not allowing BYD and the other EV startups out of China into the United States. What do you get? A little bit of stymied growth, especially for anybody else not named Tesla. I wonder what will happen when Tesla unveils the next generation vehicle that comes in under $30,000.
So, you've got that problem, which is where's the bottom when they don't advertise and they don't do anything to create demand, but the CEO of the company every day goes out and hurts demand through his actions, literally every day.
Oh, so this is going to turn into a I hate Elon speech. One, they will need to advertise eventually, but right now, with the given macroeconomic situation and the $40,000 price range of the typical Tesla, even if Tesla was going to produce 2.5 million vehicles this year, half of which would probably be sold in the United States, at those volumes, the juice just isn't worth the squeeze. Now, I will definitely advocate for some advertisement when they start reaching the 4.5 million production level. More than likely, that'll happen after the next generation vehicle fully ramps up. Tesla has too much to worry about right now than to think about advertising for vehicles that people can't afford.
Investors have had enough, and we see the fallacy in this business model now where the king of advertising the brand is now the devil advertising the brand, basically.
This is a company that you like, that you follow.
I love the company.
Exactly. So how hard is it then to try and value this company that started off as a car company, then is considered more of a software company, and then you bring in some of the personality of the CEO as well coming into the mix? How do you end up valuing accurately Tesla?
Well, the way we've always valued Tesla is a tech company. First of all, in its heyday, it traded 100 times forward earnings in the end of 21 when things were, as good as they could be for Tesla. And So part of it is a valuation coming back down to earth, and when you align it with forward multiples from Microsoft, Nvidia, Google, Apple, the Mag 7, let's say, 35 to 40 times forward earnings makes a lot of sense. So if you're looking at $3 for this year, that's how the Wells Fargo guy gets to 125. And so 40 times earnings seems like a fair multiple for a company that isn't growing earnings, but has an incredible potential future. But, this could turn around very quickly if either like Tesla gets a real CEO who's actually going to help the company, or Elon changes his tune and actually comes back to working at Tesla and promoting the brand in a positive way.
Let me be clear. You don't get the same Tesla, sans Elon Musk, without one of the world's greatest engineers and motivators of people. This man has done the impossible multiple times in his stint, not only at Tesla, but in all of the companies that he's involved with. The common denominator is Elon Musk. If you don't want to invest in Tesla due to the shenanigans presented by Elon Musk, more power to you. But I'm here to tell you right now, Tesla's valuation is where it is today because of Elon Musk. The future accomplishments of this company will be driven by Elon Musk.
RBC Capital's Tom Narayan has a buy rating, price target of 298. Joins us right here at Post 9. Not going your way today. Tom, why do you feel like things are going to turn for this company?
Yeah, I mean, look, this company is in between two waves, is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know very well. He's looking at things from a years, if not decades, perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this.
Your mother f***ing right. The energy division is growing at a rapid pace. Not to mention the natural ecosystem between the energy storage, the solar on the roof, and the vehicle in the garage.
These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today. If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone.
You could sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where this stock will be a year from now, not next week.
Ding, 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 ding! Tell him what he's won, Johnny! Your mother right. Using the enterprise value from about 2034 or so and discounting it back to 2024, and put the estimated vehicle volumes for this year, gross auto margin number, and you should get a price target that is definitely around, bear case, of about $315 per share for the year of 2024. After crunching the numbers myself, I can see why individuals might be skeptical on Tesla's future progress. But I'm here to tell you right now, they are going to be the most valuable company in a decade's time, and my fair value estimate reflects that. In conclusion, Conclusion. It would appear Fisker is preparing for bankruptcy. Will there be a white knight coming to rescue this damsel in distress? We got more downgrades for Tesla. Surprise, surprise. Ross Gerber is openly calling for the removal of Elon Musk from Tesla, which is absolutely insane. And like Tom Narayan, I'm not in the business of predicting what Tesla will do next week. I like to gamble on it, but my fair value estimates are derived from a future enterprise value that is discounted back to today. And the train has left the station. Destination, Tesla is the most valuable company in a decade's time. That's all I've got for you today. Be easy. Peace.